a lot of these AI companies are not making money. In AI, this is absolutely a time where this is a land grab. No one really knows how the market is going to settle, but everyone knows that they can't just sit around and wait for it, otherwise they're going to miss. This is really like a have your cake and eat it too deal. They get all the benefits of owning scale AI, but none of the regulatory headache. Meta is a really compelling place to be, right? They have the scale, they have the data sets, they have the funding and the horsepower to be able to actually realize some of these dreams. And so I think for the right founders, this can actually be a really big platform and opportunity for them to continue the work that they're doing, but at a much larger scale. I think my bold prediction is we're going to see more deals that leverage kind of their unique.
On today's episode of the First Time Podcast, I'm super excited to welcome someone whose insights consistently cut through the noise and illuminate the most complex corners of strategic deal making, the incredible Sara Ali. I'd say the best way to describe Sara is that she is a professional deal maker with deep expertise across fintech, AI, ML, cybersecurity, and deep tech, to name a few. Sara's career journey is nothing short of astounding. She's currently the Senior Director of Corporate Development and Strategy at Yahoo, but her impact spans across the industry with pivotal roles at Robinhood, where we had the pleasure of working together, Google, and Microsoft's M12 venture arm. Sara's not just observing the market, she's actively shaping it and dissecting it in her brilliant Substack called Please Advise, where in one of her recent posts, she noted that regulatory friction is no longer an outlier. It's baked into the timeline. And it so happens that the topic that I wanted to talk with Sara about today is closely related to this wonderful observation. But more on that as we go along. For now, just know that Sara's here to help us unpack the intricacies of some recent major strategic investments, market trends, and happenings in the AI and regulatory landscape space that define tech M&A today. Sara Ali, welcome to the First 10 Podcast.
Thanks, Boris. Excited to be here and excited to get into it with you.
Yeah, I am as well. But first, a couple questions that I'm curious about, and I'm sure our listeners are as well. What's something about you that most people don't know, Sara?
I think on a professional level, I actually, my background's in engineering. So I have my bachelor's and master's in engineering. So not the typical banker to M&A professional route, but more use like engineering as a basis and foundation for how I do my work. And it actually, I think, it does change the way I approach deals and how I think about things.
I bet. Yes, and so much of the value prop probably connects to some engineering attribute. So that's really cool. Probably a whole nother topic about how one transitions from engineering into the space that you're in today.
Yeah.
Another question that I'm curious about, what's something that you remember from the last book that you read?
Last book that I read. Great question.
What?
I read a whole lot of fiction, so I don't have any fun nonfiction reads for you, but the last book I read has left me in tears. It was called A Little Life, and in my right mind, I can't recommend it because it is just so heart-wrenching, but just a beautiful story and beautifully written.
I like fiction.
Yeah, this one's a great book. It is quite poetic and also just really gut wrenching, and so it has given me a little lull of reading books right now until I can muster picking up another book after this.
Wow. Okay. Well, without giving anything away, because it sounds like you probably have to get into it to get the takeaway. But what is something that is memorable from the book, or something that you took away as application towards your own life?
Yeah. So it follows the lives of four male friends from college and even through their childhoods on to where they are today. One of the main characters ends up being a very high profile lawyer and has overcome significant challenges throughout his life. And it just kind of goes to show that, especially in the topics that we're going to be talking about today, when you come with like different perspectives, different backgrounds, it really can end up being a superpower. And I'm sure, Boris, you see that a lot in the hiring world as well. But I think just everyone has really unique life experiences and in some ways like doesn't prohibit them and instead just really helps them shine in unique ways.
I believe that. Yeah, we are all, unique and special and kind of super people in our own right. Some might kind of, be glorified by society in whatever way society glorifies them, and other might be a little subdued, but nonetheless equally special.
Yeah.
Oh, okay. I think I want to cry now too, Sarah. Okay, let's get into some maybe less deep stuff, or we'll see how the conversation goes. But want to jump into the M&A stuff because it is I'll say like a wild time it feels like in the M&A space. But first, you have a very impressive career journey, right? So you've done corp dev at some incredible places. We met at Robinhood. I think you came to Robinhood from Google, spent some time at Microsoft, now at Yahoo. I know you can't share too much about what you're working on at Yahoo, but what is generally going on at Yahoo? I mean, it's such a storied player of the internet, and then it's gone through its moments of maybe the market not being exactly clear of what it's up to. But if you're doing corp dev there, then they have to be up to something. So what does Yahoo's future look like without sharing too much about what you have in store?
Yeah, I mean, Yahoo is really a remarkable company. I would classify it as the original internet, and it still has extreme relevance today, whether people kind of think of it or not. It's still a top 10 website. It hits tons of traffic and has really popular products across Yahoo Mail, Yahoo Sports, Yahoo Finance, which I personally use all the time in work settings. And really kind of thinking originally, not just following the trends everyone else is doing, but what do people actually need in this next wave of internet, and how does Yahoo help people with their lives, not just push the puck forward? So I think a lot of cool things coming out of Yahoo right now, and definitely a company to watch because a lot more to come.
Cool. And I'm a big fan of yours, and I'm a big fan of where you invest your energy. So your recommendation is keep an eye out on us. There's good things coming from this direction.
Yeah, definitely. And me being in corp dev, I'm always excited about the inorganic strategy and what things could we be looking to buy or partner, and how can that shape the next leg of the company. And so always interesting to kind of think about what does the next chapter look like for a company that's had several chapters and has really kind of stayed around in some fashion, more or less, over now decades.
Wow, I love that. And so speaking of corp dev, before we jump into some of what's going on in the M&A space, our audience is mostly either engineers or founders or investors. I'm sure investors are very familiar with corp dev, but tell us a little bit about what the world of corp dev entails. If someone finds themselves being connected to someone from corp dev, what does that mean, and what's your kind of connection to what's going on in the deal making world?
Yeah, absolutely. So corporate development is kind of a catch-all category for how does a company think about everything outside of just organically building the product. So whether that's, deep partnerships, whether that's acquisitions, divestments, mergers, all of those kind of creative structures land within corporate development world. I'd say majority of the time, and typically if you look at previous deals, it's spent on acquisitions. And so that's probably like the meat of the work and everything associated with that. So whether that's how do we then find the gaps in the product strategy to accelerate roadmap by acquiring IP or acquiring people or acquiring a full business with revenue. Those are some of the questions that corporate development grapples with and works really arm in arm with the rest of the business. So the product, the engineers, the C-suite, and the rest of the company to really augment what's already all the great work that's already happening within the company.
Nice. So you mentioned organic and inorganic. So like if a company is at point A today and then they want to, achieve some sort of an outcome, organic, you're referring to like natural hiring and the natural abilities of the team that is there today, right? That's organic.
Exactly.
Right.
Yeah. So organic is all the things the company is doing today, which is hiring people, building the product, building the roadmaps, thinking about the future. And inorganic, I would classify as everything a company can do with kind of the outside world. So whether that's a deep partnership, whether that's acquiring another company and kind of merging those two together, it's how do we get from like the point A to point B that we're trying to get to faster? Or how do we even consider instead of that point B, a third, point C that maybe can get unlocked by that the company couldn't do on their own
Right. Okay.
or couldn't
Yeah.
do fast enough.
Sounds dynamic, and it sounds like it really opens up a company to achieve their target goals and pursue opportunities in a broad range of potentially creative ways.
Yeah.
So
And the last thing I'll say on it is, a company can do a lot of things, but they can't do a lot of things at once. And so acquisition can really be a tool to help free up things that a company could do, but maybe wants to prioritize spending time on a different area and acquire something that's already been built, already has great people that have the know-how and the knowledge to do it. So there's a lot of different angles when you look at a deal and what it can bring, and it's not always the company can't do it, and so let's buy it. Sometimes it's we can do it, but at what cost, and how long is that going to take us?
that makes a lot of sense. And so I imagine now with all the market excitement around AI must be on the minds of corporate leaders. It is on the minds of, I believe, all corporate leaders. And so what's your take on how corporate leadership is thinking about AI from the lens of corporate development, from the lens of pursuing strategies outside of whatever may be organic?
Yeah. You know, in my opinion, I think there's been a lot of hype cycles for areas in technology. AI is here to stay. It is, in my opinion, truly transformative and is going to really impact the way companies do business, the way people live, the things that humans do and don't do. And so it really, I think, is rightly on the minds of business leaders and companies. When you think about corporate development, it is such a rapidly evolving space, and so one, it's a hot area to keep an eye on and really do a lot of research and understand the market and how it's developing. But two is kind of, I think, at the forefront of a lot of leaders' thoughts to think about, okay, how can we leapfrog into the space using acquisitions or other kind of other inorganic means to play in the space. And I think later on in the podcast, we'll talk about some specific deals, and it'll really highlight how some of the bigger tech players are doing this.
Yeah, and I'm really excited to dive into some of the specific deals. But before we do that, just from like a company leadership perspective, like because AI is hot, that must mean that it's of interest to companies. But then because AI is hot, it must mean that prices are wild. I mean, I'm seeing funding rounds, the top AI labs, and I'm in the startup space, so I see funding rounds all the time. What's your take on price versus value? How inflated do you think things are right now, or are we in a place right now where this feels like a good buy, given what the opportunity for AI is in the future?
Yeah. I'd say right now, AI and especially AI M&A is pretty chaotic when you look at it from the outside. There's a lot happening, but I think when you really like distill it down, there is some clear logic and intent, especially for companies that are acquiring in the space. And so, um, you know, we're seeing a lot of really creative deal structures in the space, and I think these are designed to really solve like one of two things, which is there is a scarcity of talent in AI, and just the speed is so crucial. And so when you take a step back and see what's happening, I think things are moving really quickly, and um, some of the chaos surrounding it is because people want to partake in this place and make progress and bring it into their own companies, and to do that it's more like speed over execution in some cases. But really what I'm seeing is there's a lot going on, and I think the larger companies are tackling it in one way and the smaller companies are thinking about it in different ways. But in some form or fashion, companies are thinking about how do we leverage it internally, how do we leverage it and give AI to our customers? How do we, how much of our business is going to get impacted, or maybe how little of our business is going to get impacted, and how do we really, start to build a thesis around that?
Interesting. I'm so fascinated. I want to go into so many different areas, but I think I want to first go into some of these few deals that I know have been highlighted in the AI space, and then I want to spend a little bit of time talking to the founder of an AI startup, who I know has acquisition on some version of a potential outcome, though many don't like to talk about that openly, and about what's really kind of valued in the space. But there are a few deals recently that have made headlines in the AI space. I'll mention a couple of them, but there may be others that have fall into this category or similarly notable. But the few deals that I'm curious about are the ones that were creatively structured that seem to have an emphasis on the talent component as the kind of key attribute of the deal. So Character.AI was acquired by Google for $2.7 billion. Seemed like that was acquired in a licensing deal where key people joined Google. And again, correct me on any of the details here. Then there was a follow-up deal a little bit later where Scale AI was partially acquired by Meta, that was recently acquired for $14.3 billion for a 49% stake. And then even more recently, Windsurf was acquired by Google for a licensing deal. And then over a crazy weekend, right, Cognition swooped in and then, picked up whatever didn't get acquired by Google. So those three jump out as what I consider, creative and with a heavy emphasis on talent. Like, what's your take on all that?
Yeah. These are all really interesting deals. I think for a long time, acquisitions were done the same way and you were just buying different things. These deals really turn the structures on their head and they're actually kind of novel ways to structure deals. And I really want to get into some of the mechanics of that. And then is it a good thing? Is it a bad thing? Kind of what are the pitfalls of some of this? But you mentioned the Metascale deal. That was huge just on purchase price alone, almost $15 billion of deal. And they didn't acquire the whole company. They only acquired 49% non-voting stake in the company. So ostensibly Meta is an investor in Scale AI. But what the deal allowed them to do was bring on the CEO into Meta leadership to run their AI division. It also gave them a preferred vendor relationship. And so Meta gets priority access to Scale's capacity in data labeling and their infrastructure. So it's a really creative way to both grab very key AI talent in the form of Alexander Wang, who moved into Meta, and then also secure more capacity for Meta's own AI infrastructure needs. And so this is really like a have your cake and eat it too deal. They did spend a good chunk of money and they get all the benefits of owning Scale AI, but none of the regulatory headache. And so we'll talk a little bit more about kind of some of the regulatory hurdles, but this amongst the other deals that we're going to talk about, they really leveraged not outright acquiring the company, but effectively doing that to then kind of bypass what are traditionally regulatory checks on deals of these sizes.
Yep. Is that I've seen that included in many of the headlines, kind of like casually mention regulatory, but can you go into detail? What is regulatory for maybe traditional acquisition look like? And then it sounds like in this case, this avoids that. And so, yeah, share what that looks like traditionally.
Yeah, so typically different things can trigger a regulatory review of a deal, but one of the main things is just the size of the deal. And so 2025, it's around 126 million is the bar. And so if a deal is over that size, which obviously a 14, $15 billion deal is well over that magnitude. But any deals above 126 million that have voting securities or assets require an HSR filing. And basically what Meta has done is because they acquired 49% non-voting shares, they were actually able to bypass this regulation. And so they don't need to file with the FTC. The DOJ does not need to review it. Typically, along with these filings and this review, there's a 30-day waiting period. They were able to rapidly move through this deal without going through the same regulation you typically would have to do if they outright acquired the company.
Interesting. And do you know why regulation is set up the way it's set up? Has it always been this much of a challenge, or is this a recent trend?
I think with companies of this size, there is a lot more, in the last few years, there's a lot more scrutiny in terms of antitrust, anti-competitive nature of deals. And so these regulatory checks are really in place to make sure that, these deals are fair for the overall environment, that they're bettering off the ecosystem, they're bettering off users and customers. And so, right now it seems to be a little bit of a gap in terms of being able to do these deals and bypass regulatory review. I don't think this gap is going to be there, forever. I think regulators are going to get smart on this and start to look at these deals that aren't traditional acquisitions, but still start to regulate them in the same way because effectively they are, very similar deals.
Interesting. Okay. So, and I think from my very limited understanding, right, regulatory usually catches up to happenings in the market, right? So some innovator pushes the bounds of regulation, and then regulatory catches up to be able to, do what it does, right? Protect interests in whatever
Yeah.
way it needs to protect interests. Okay, so in this case, it looks like there's some really creative deal making going on, and it seems like the benefits connect to these companies' motivation to make progress and compete effectively in the super competitive AI space. So it seems like I get what's in it for Meta. What's the benefit from the company getting acquired? Like the company getting acquired seems like they're getting some proceeds. It seems like they're having to kind of break off a part of the key team. Seems like they're leaving behind a company that there's some market perspective that, some people are just calling it as little as a shell. Some people are, putting little confidence in its, ability to, do what it's supposed to do. I mean, are these standalone companies expected to succeed? Is it really just a talent grab? Is it really just a money grab for the leadership? Like, what's your take on what's going on there?
Yeah. I think for startups, they're not going to do it if it doesn't make sense. And so in these deals, they're still getting, the main stakeholders here is the team and then the investors behind the company. And so in these deals that we're talking about, they're still getting significant proceeds and returns on their investments. And so for the team that goes over, they're getting liquidity for their shares or in some phase it's compensation in terms of like their positions at Meta or Google or wherever they're landing. And so, they're getting better off both in terms of like compensation, equity that they had in the business. Investors are getting paid out in one form or another. And so, at the end of the day, like people are happy. This is a little bit of a novel way to do it because it is, as you mentioned, leaving these startups with a little bit of like a hollowed out shell. And so, in the Character.AI deal, they lost their founders. In the Windsurf deal, they lost their team, they lost IP, and it's really like kind of a remaining shell of a company. Oftentimes in VC, when we see this, it's basically like effectively a company shutting down and then kind of starting a new chapter. And that's kind of what I see here is some of them are going to have very similar missions and they're going to try to rebuild, but it is really going to be a new chapter for these companies. And in some cases, I think just an overall new pivot in product and focus. And so the company that's left behind is not is going to look very dissimilar from the company it was before these deals happened.
Right.
But I think ultimately, it's startup world, so there is going to be a lot of acquisitions, a lot of shutdowns, and this is just a new wave of a cycle that's been happening for a very long time in startup world.
Yeah. So this is really interesting because I look at this from the lens of hiring for early startups and building early startup teams, and these engineers who I primarily work with join these early startups very much so for the founders, very much so for the mission, and then they kind of go along for some ride. And then let's say you were an early engineer at Character or Scale or any of these companies, and then one of these deals happens, and if you're on the side of being chosen to come over, then you're on the beneficial side. It sounds like founders benefit. It sounds like investors benefit. If you're part of the startup, but then in the kind of left behind camp or the group that didn't get to come over, like from your perspective in just general corp dev, is there like who's looking out for those people, and does it seem like those people are on the receiving end of a good deal, or how should those people think about the deal that they're getting if they're not on the kind of if they're not part of the group that's kind of picked to come over?
Yeah. I think it really depends on the deal. I will say though, even in the course of a normal acquisition, oftentimes it's not the entire team that's coming over for company. It could be a subsect of the team. And so In those cases, sometimes it can be a great severance package for the people. They can move on to kind of their next endeavor. Sometimes it's not a great outcome for them. And I think in the same likelihood here, it really depends on what does that next chapter of the company look like? Are they excited about that? Are their incentives aligned to kind of building that next future together? But I think it really ends up depending on kind of the company, the space, and uh, it is a big change for the people going over. It's a big change for the people who stay behind, and ultimately, I think up to the people to really determine, like, is this still working for me? Is this set up? Is this where I want to be for the next leg of my career, or is this kind of a natural point to think about what comes next? And I think, unfortunately, in some of these deals we're seeing with the hollowed up startups that are left behind are now kind of doing waves of layoffs and really kind of getting themselves really lean for whatever comes next for them. And so it does end up naturally being a very tumultuous time, especially in just the hiring and layoff cycle.
Yeah. We saw that with Character.AI. I think there was, a little bit of skepticism when that acquisition first took place, and then a little bit of optimism, but maybe that was just kind of market perception. And then it seems like they kind of just are having some challenge. We've talked to great talent out of the Character.AI, and we'll see how Scale AI does. I think they had some waves of layoffs already, and then Windsurf got scooped up real fast, like over a weekend, by Cognition. So just again, with regards to who's looking out for those people, I mean, it is ultimately the founder, right? The founder has to agree to any deal that's made, and any deal includes consideration for themselves as humans, consideration for the investors, consideration for those that are benefiting, and consideration for those that might not be on the very beneficial side of it. So founder signs off on everything. Is that true?
It is often the case. It's typically whoever has the majority ownership in the company. Oftentimes
Right.
it's the founder with the heaviest thing, but that's not necessarily always the case. Sometimes it is the investors that are negotiating these deals
Yeah.
on behalf of the company. And so while oftentimes it's the founders, it isn't always necessarily.
It must be tough. You must have been in kind of so many closed small rooms, right, where these sorts of debates are happening. It's probably far from a no brainer. But yeah, it must be tough. I've seen some chatter from the people on the left behind side, and yeah, it sounds like it is just the nature of business. Maybe it just sums up to that.
Yeah, and I think you're hitting on a point that I see in terms of leadership style. And so, having just talked to so many founders, so many CEOs, I think what really distinguishes the truly great leaders are the ones that really advocate for their team, both in the ones coming over, the ones staying behind, really thinking through what this means, not just for themselves, not just for their investors, but really for the people who have gotten them to where they are today. And that is something I see that really stands out to me when a founder is uniquely focused on making sure like that outcome is really strong for the whole team, no matter kind
Yeah.
of what direction it's going in. And so I think you're picking up on something that people have different approaches on, and it's always interesting to see kind of when push comes to shove who really fights for their team.
Yeah. I mean, it must have been in these cases just one, super worth it for the founders, and then two, maybe they had an insider perspective on what the future of their company respectively looked like, and I'm guessing that was probably a big part of the calculus. I'm sure they did everything they can to
Yeah.
care for team.
Yeah, I think that takes us to a really interesting topic. You started at the beginning of talking about kind of, these are huge check sizes. How do we think about valuation? How do we think about multiples? And the reality of it is like a lot of these AI companies are not making money. They do not have like a traditional M&A math means you lean on revenue a company is making or earnings to determine how much you'll pay for a company. But today in AI, most startups don't have the revenue, let alone earnings. And so these deals are really what I'd kind of coin as scarcity multiples. How much talent and know-how can you lock up before your competitor does? And so you can't evaluate these deals based on, how many revenue does this company make this year? How many customers do they have? It really ends up being a big part is the talent, and then kind of the know-how, which just can be the IP, the product, or a whole host of other kind of engineering and product related things.
Yeah, and I think this is a great segue into the scale Meta deal, and then what like what the heck is Meta doing with its AI talent grab? But some of the numbers that are being thrown around are wild for the market. But put out a earlier podcast around maybe while it's wild for the market in one way, maybe it's not that wild when it comes to whatever math Meta is using to justify its purchase. So I guess question for you. So Meta purchased Scale AI, 14 billion. Their market cap's in the whatever trillion plus category. So it's big, 14 billion is a lot of money, but small number compared to total market cap. And then there's rumor of them spending hundreds of millions of dollars for single individuals. Like, do you think that's all tied to a corporate development led M&A strategy? I have a theory on it. I don't know anyone at Meta, so total speculation. But did Meta budget $100 billion for an acquisition, but only spent 14 on scale, and then is picking up the rest of the talent at these crazy dollar amounts in a way that's worth it? But what's your take on what's happening there?
Yeah. So I am going to approach this from a little bit of a different angle, right? Like when you are working for companies with these large trillion-dollar market caps, sometimes the math on these deals looks very different. It's not, what can this company get us, but instead it's what's the risk of missing this trend. And so in AI, this is absolutely a time where this is a land grab. No one really knows how the market is going to settle, but everyone knows that they can't just sit around and wait for it. Otherwise, they're going to miss where the market evolves. And so big tech really has too much to lose and too little time to build everything from scratch. And so for them, even a $15 billion deal, these expensive, 100 million plus deals that they're doing, even if they don't buy an immediate breakthrough, even if the talent ends up leaving and the deals don't amount to, a successful deal, it's actually more expensive for them to not invest at all, to sit there and do nothing. And so, when I think about these deals, it's like, how much is the budget to miss the next big trend in tech? It's pretty massive. So while I don't think they probably have like a wallet share and say, we're allocating this much into AI, I do think it's pretty easy to justify pretty large prices when you see AI as an existential threat to your business.
So I agree with that, and it seems that historically, or at least my perspective of history, is that those large amounts tend to be applied to acquisition. So like the buying of Scale AI, or even like, the buying of a 2-person startup that doesn't have a product, but those 2 people are insanely valuable. So the company justifies a large number. I haven't historically seen those numbers applied to what looks like to the market as general recruiting, like, reaching out to someone that works for a company and, convincing them to come over and join. So how do those two worlds kind of collide in this case?
Yeah, I think actually, Boris, you hit it really well in the head in one of your latest podcast episodes. But oftentimes the HR function and the M&A function in a company don't talk. And so while there may be a budget for hiring because you want pay equity, because historically this has been the budget for these roles, M&A doesn't have those same constraints. And so while we may have to have pay equity for base salary, you could end up getting millions of dollars of an equity grant, and an acquired engineer may be making 10x, 20x what a regularly hired engineer might make. And this is kind of more of like a little known secret in the industry, because it isn't equal, right? Like the talent that we get, depending on like the format you get it, can be wildly compensated differently. Especially leaders that we bring over from startups can get compensated pretty high. Now, the compensation can be structured in a number of ways. It can be tied to earnout and certain milestones they have to hit. It can be held back so that we can retain the founder for a certain number of years. But ultimately, I think as we're seeing these larger hiring packages for AI, it just makes sense, right? The company is still spending a lot of this money via deals for key talent. Oftentimes, some of the thought is, we can't hire this talent. They're out building the next company to compete. And organically we just can't hire them. But if you're able to get compensation to a point where it's compelling enough for them to come over, that's great. Sometimes even having a compelling compensation package isn't enough to bring a really talented engineer, developer, founder over. And oftentimes it's, acquiring the company and bringing them in house and structuring incentives in a way that really gets them excited to be there and build impact within the company versus on their own.
Yep. Interesting. And so in this case with Meta, I'm curious to hear your kind of insider perspective. And you haven't worked at Meta, so I think we'll both just be kind of speculating on how this goes. But given the size of these packages, and maybe first curious, like, do you believe the numbers that are published? Should one believe numbers that are published in the way that they're published, or how much kind of fudge factor should one give to some of the numbers? I mean, we're seeing $100 million sign-ons, we're seeing $1 billion packages. Like, what's true and not true from your perspective?
Yeah. So I think of my role from how I structure compensation packages for people that we're bringing on via deal. And oftentimes the $100 million could be like the top line value. It's like, hey, if you come to the company, you outperform, you're able to deliver XYZ new model product that we're building, the sky's the limit for the compensation you can bring because the impact you're having is massive. It may not be like, hey, this is a guaranteed 100 million, but it may be, over the next 4 years, you're going to get 20 million, maybe 5 million a year. And then on top of that, if you hit these milestones, you could be getting an additional, 20 million of bonus to reach them. And so while I think we gravitate towards the headline value, the reality is like oftentimes strategy shifts, and we should talk about Meta in just a minute and how quickly strategy shifts. But, if in a few months they're like, hey, actually, we've overpaid, this isn't working, and they let go of that engineer, they probably won't be around to collect on that full $100 million or however big that package is. They'll just get whatever few months that they had been at the company for, which is not trivial, but doesn't actually end up like amounting to those full like numbers that are thrown around. And so, well, I don't know specifically how these deals are structured. I think about how M&A compensation packages are structured, and often the headline value doesn't tell the full story about how much is guaranteed and how much is more, based on time or performance or other factors.
Right. And I've seen just from our limited time working together, so many kind of creative ways to structure that. And so those sound like top line, all in, ambitious headline numbers and a lot of nuance baked into them.
Yeah, absolutely. And when we think about nuance, right, I just saw Meta just a couple weeks ago had an AI hiring freeze. And so after spending billions of dollars acquiring AI talent organically, inorganically, I think even they have like taken a pause and kind of show some saturation and just how overheated the market is. And they're doing a bunch of reorganizations within the company to align all of their AI under one unit. But you can kind of see, like, even if Meta has to tap the brakes on their AI hiring, it has become a very overheated market. Despite that, I don't think AI M&A will be cooling down anytime soon. I think, we've talked a lot about the large players in tech, but nearly every company is looking for AI talent and to accelerate AI in some form. And so I think in the short to medium term, there's still going to be a large desire to get critical talent that can help in this space. And often that's where you see M&A become a shortcut, right? Instead of hiring 1, 2, 5, 10 people, you can get a team of 50, 100, and you get access to the entire team. You get access to the IP. You get access to the know-how, sometimes customers and revenue, but really things that can help leapfrog you forward.
And in this case, in the Meta case, there's 0% chance that recruiting can organically go pull this talent, right? And so, can you share what you presume is the kind of group involved at Meta that's, that greenlit this, that is acting on this? Like, is this must be like Zuck level green light? Is he calling these people themselves? What's Corp Dev's role in this process? Is recruiting even in the room with these hires?
Yeah. Given I haven't worked on Meta, I don't know their specific dynamics, but I'd have to imagine, just given the sheer size of the deal, Zach is personally involved in talking to these folks and really probably driving a very compelling vision for them to come and kind of create the next set of tools, the next technology at Meta. And really for someone who's a builder and really um, is excited about the technology and the use cases it can have. Meta is a really compelling place to be, right? They have the scale, they have the data sets, they have the funding and the horsepower to be able to actually realize some of these dreams. And so I think for the right founders, this can actually be a really big platform and opportunity for them to continue the work that they're doing, but at a much larger scale. But in terms of who are the players around the room, C-suite, I think corp dev is often involved in a deal like this. I'd be surprised if HR wasn't involved. I think those are all three kind of key legs in making deals like these.
Love it. Okay. Very, very exciting happening for the market. I mean, it's very rare that like hiring is a headline, and it's very rare that it's making kind of global news in this regard. So, kid in a candy store from my perspective, and it's kind of fun to watch it all kind of unfold. And it's tough to tell if we're still, they just announced a hiring freeze, but for what divisions are we in the later part of the cycle? Are we in the middle of the cycle? Are we early? Tough to know, and it'll be. It's neat that we're capturing this so we can go back and find out. Two questions. Okay, so if you're, we talked about all these kind of unique deals that are going on in the AI space, and so these are all outcomes that startups are experiencing. So if you're an engineer and you join an early startup and you're kind of going for the dream there, right? What's something that you should be thinking about or asking founders or be doing to find yourself on the positive side of what these outcomes have looked like, at least in these few examples that we shared?
Yeah, I think a lot has been talked about, equity that you get in a startup when you start, but sometimes a lot of the real wealth and compensation can be built when a company is getting acquired. And so typically it's those folks that the founder deems as key employees and people that they really want to recruit and retain and keep, especially, when it's being acquired by a larger company. And there's usually a handful of people that are really instrumental in building the product, keeping it going, really delivering an outsized impact. And if you're one of those people, it's not just the compensation you'll get for having been at the startup at the right time, but it's the compensation you could get at the time of a deal that really, can also be like a big source of like outsized compensation. And so while the first one's talked about a lot, I think the second one is typically kept a closer secret. And oftentimes it's really thinking like, am I really driving value to the startup? Am I like critical here? And if not, what are the areas I can get involved where I will be?
That's really interesting. And so it sounds like what you're saying is it's not just about joining the right startup and kind of winning that startup lottery. You also need to do everything in your power to be considered kind of key or to be considered a of highest value contribution to the success of that startup. So it sounds like there are tiers of contribution and tiers of expected outcome when working for a startup.
Yeah, absolutely. And sometimes in an acquisition, it's not that a company has become so successful that, they have to, be acquired. It's that, they've played out their journey and they're not getting the traction they needed. They're not able to get more investment and they do need to shut down. And acquisition can typically be like a soft landing spot where they have, roles for the team. Some of the tech can live on in various ways. And so in those cases, the actual equity that you have in the startup may not actually be worth that much, but the next leg of the chapter in delivering value at the company that's acquired you, that actually can be. And so there's more milestones than just, the one at the startup, but it's also like what happens next to the startup and sometimes there's, it's not always within your control, but I think the more you kind of think about who are those critical folks at the startup, you can start to kind of gain a sense of, where would the compensation go?
Yeah. Is there anything that if a engineer is considering a startup and the engineer asks the founder what could be put in place to assure that either I will be part of whatever outcome transacts, or that you won't pursue an outcome where there's, division in outcome. Is there anything like that an engineer could, ask for, or that a founder could put in place if they really want to, offer that reassurance?
That's a great question. I haven't seen that done in practice. I think more informally, definitely it can be a topic of conversation. I think ultimately, there's certain things within a deal that can make a company get harder to acquire, and oftentimes something that's like, hey, you have to take on a certain number of employees, or certain employees in particular, that could end up making the deal infeasible. And so, um, oftentimes, like I invest in startups. I work with a lot of founders, and I often tell them to keep it really clean. And so, even when you're getting money from investors, don't give them, certain rights, right of first refusal, right of first negotiation. Keep it simple, because that'll just increase your chances of being able to exit, and have the flexibility to do so depending on, whatever circumstances happen for your startup. And so, well, I think it's definitely a conversation that can be had. A little bit is kind of out of the engineer's control, out of the founder's control, and kind of just ends up being where the startup lands.
Interesting. So
Yeah.
an
But always
engineer's
something good to think about, kind of when acquisition is being discussed. At that point, that's kind of a good conversation to bring up and tee up, because that's like another point to advocate for yourself, outside of just when you're getting hired onto the startup.
Yep. Interesting. And maybe this is so new that it hasn't kind of found its way into these sorts of, deal structures. Yeah, I just had my first engineer ask me just last week. This was on their mind. They wanted to protect themselves, and they wanted to know how. And I was like, oh, that's a really good question. What do you have in mind? And it was interesting to hear their thoughts. They didn't really have anything too substantial, to be honest. But it was interesting to hear their thoughts. And maybe it does just come down to it being a above board conversation where the engineer makes it a topic of discussion, and the founder shares their view and perspective on it. And like many things when joining a company, it involves some trust, and it's then otherwise part of the risk calculation.
Yeah. Yeah. And what is standard in startup world and a deal that is constantly evolving. And so while that may not be standard now, who knows, a few years from now we might look back and this is a common, clause somebody puts in their hiring contract to, you know, preserve safety in terms of a acquisition or other outcome for the company. And so, while not standard today, who knows how the space evolves, especially if in areas where talent is very scarce and in high demand.
And then so now, our other demographic founders, right? So any advice for founders as they're navigating the, insanity of this market? What could a founder do to, increase the value of their startup and increase their kind of, relevance and all that's kind of happening from the lens of, value to these larger, enterprises that you've been a part of and we spent our time talking about?
Yeah. I'd say in AI specifically, overall in tech, talk a lot about like the quality of the product, the customers you grab, the users. And I'd say that is still very important here is, what kind of product market fit are you building? What kind of customers are you attracting? What early signals are you getting? But more so in AI than probably any other space right now is also think about like the quality and the caliber of your team. And so, when looking at any type of exit, acquisition, investment, in the AI space, the team is so crucial. And we're seeing that with all of these creative deals, right? A lot of them are spending a lot of money just to basically acquire the team. So for founders out there, really think about the caliber of the people you're bringing on. And ultimately, that leads to good products and good outcomes. But also, when larger companies are looking to buy you, they are really focused on what type of talent are we bringing on.
And that's primary, right? I mean, the revenue and the product fit is very important, but the talent is non-negotiable, right? Like that must be included in order for a transaction to take place.
I wouldn't. I'd say there's deals where you only buy the product and the IP, and the people don't come along. But I'd say in AI, especially the deals that we're seeing, right? Like we talked about the Metascale deal, we talked about Google Character deal earlier this year. Microsoft also paid $650 million for Inflection AI to license their models and hire a big chunk of their team.
Okay.
I think we've touched on Windsurf. Amazon also did a similar reverse acqui-hire style deal with a company called Covariant in the AI robotics space. And so in the AI space specifically, it does seem like talent is some of the driving factor for these deals. And so it does play an outsized impact here. But, there are deals that are just, very like IP focused, very tech focused. And even within these deals, right, you're seeing a lot of the team come forward, but you're also seeing a license to the technology, whether that's an exclusive license or non-exclusive. So the IP, I don't think it should be forgotten, but the talent is really outshining it in some of these headlines.
Love it. Okay, so you heard it here first, founders. Hire good people. It matters, and you all already know that. Any bold predictions for 2025? Or even for 2026, since we're in the back half of 2025 already?
Yeah, I think, I'll keep it more deal related. I think, especially as we're talking about a lot of these big tech players, right now they're paying a lot of cash or equity to do these deals, but these big technology players, specifically these hyperscalers, have commodity that other companies don't in the form of access to GPUs and reserve compute. And so my kind of prediction for deal structure is that they're going to start to lean, or if they don't start, they should, they should start to lean into some of their built-in advantage, which is, offering reserve capacity to startups. For startups, this can be more valuable than cash, right? The best startups, they're able to raise money, they're able to hire the right folks, but, there's still a big supply crunch in terms of startups' ability to get access to GPUs. And that's kind of a superpower the Amazon, the Microsoft, the Googles of the world have. And so I think my bold prediction is we're going to see more deals that leverage kind of their unique built-in advantage and kind of dangling these GPU credits or reserve compute capacity in exchange for equity, exclusivity, acquisition, and for a startup, that can be more valuable than cash in the bank.
Thank you, Sara. So where can people reach you, and what should their first message to you be? What would you like to hear from our wonderful listeners?
I would like to hear anything and everything. Give me feedback. Tell me where you think I got it right. Tell me where you think I got it wrong. As Boris mentioned in the beginning, I have a newsletter for M&A deals and the latest that's happening in tech. So you can find me on Substack under Please Advise. But my door's open. Would love to hear your thoughts. And, I've been doing M&A now for 12 plus years and always kind of excited about how the space evolves and how deals and the format of deals change. And so definitely this is going to be a space to watch.
Awesome. Well, thank you again for joining us. I learned so much. I was personally curious about all the stuff that we're talking about. So thank you for joining us. Thank you for sharing all those insights. And yeah, what an interesting time in the market, and excited to kind of bear witness to all that unfolds. And I will stay glued to your newsletter as you recommended. Recommend it to others as well. Keep dropping the good stuff in there, Sara.
Thanks, Boris. This has been great. I feel like there was so much more we could have covered. So we're probably going to have to do a future episode at some point.
Yeah, guaranteed. Thank you again for joining us.
Thank you, Boris.